This week, we will preview cattle on feed numbers. We're going to talk a little trade, and we'll preview livestock slaughter. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us this week is livestock economist Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
No reports for us to dig into, so we'll spend some time talking trade. We'll also talk a little preview of next week's cattle on feed numbers and livestock slaughter numbers. But before we get to all of that fun stuff, let's recap what happened this week in the markets.
Yeah, so we start on the cattle side this week. Generally on the cash side, but better news again. So live fed cattle were 35 cents higher this week. Those feeder cattle markets were anywhere from $1 to $4 higher this week. On the futures side, the December live cattle futures contract was down 35 cents. The November feeder cattle contract was down $2.35. We did lose 12.5 cents off of the December corn futures contract this week. Choice box beef was higher this week, $9.45 higher. That actually puts it $13.20 above where it was a year ago at this time. So some good news on that front. Ribs and loins both showed a lot of strength this week in that some of the components on the box beef side. On the hog side, cash barrels and gilts were down $1.10 this week. The December lean hog futures contract closed up 20 cents. And we also gained about 40 cents on the pork cutout value. Stronger bellies led the way this week in terms of a higher cutout value.
We really kind of have seen a pullback in the cash hog market the last couple of weeks. How much are you watching? Is it just a couple of weeks of kind of meh business, or is there some concern about maybe starting to push lower as we head into this the end of the year?
Yeah, so I think seasonally we're still going to see some larger runs coming between now and the end of the year. Although we raise the majority of hogs inside, there still seems to be a lot of seasonality associated with hog production. So I think between here and the end of the year, we'll see bigger runs that might keep prices a little bit lower. I'm not sure I'm overly concerned when you look at the pork cutout value that's nearly $7 higher than it was this time last year. It tells me that retail demand probably staying relatively strong, both domestically as well as internationally.
It's all that really good bacon and pork chops.
So perhaps the pork industry is beginning to figure out the consumer side of the equation better than maybe it was a few years ago, and that could be some positive news on the demand front for sure.
All right, let's take a look at slaughter numbers for cattle and hogs this week. What are we seeing in those runs?
Yeah, so bigger runs this week. USDA is telling us for the week ending October 19th, a run of 608,000 head of cattle this week. That's 22,000 head more than we did last week, but down 30,000 from what we did last year. On the hog side, a bigger run there as well, 2.613 million head of hogs this week. That's up 29,000 relative to what we did last week, but is 3,000 head less than what we did 1 year ago.
When we take a look at these numbers year over year, where are they sitting?
Yeah, so cattle slaughter is 3.8% below what it was a year ago when we look at year-to-date numbers, while hog slaughter is up 1.1%.
All right, no reports for us to go over this week. I do want to talk a little bit about trade. I think it's a good reminder to think about that relation to what's going on trade-wise, why this is important, especially as we think about the demand picture and how that kind of plays in relation to markets and into prices.
Yeah, so for sure, I say many times, growth in consumption of beef and pork probably occur outside the United States over the next decade, not within it. So I think talking trade's important. You know, USDA Foreign Ag Service turned out their October circular related to beef and pork, and there's some telling, and it's different between beef and pork when we look at these from a U.S. perspective in particular. When you look at the data available to us, and a little bit of forecast from USDA is involved as well, the United States beef exports uh, from 2022 to projected 2025 down 429,000 metric tons for the United States. Um, at the same time, when you look at a country like Brazil, up 700,000 metric tons. It's almost double the increase from them as our decline. I think just reminds us that these high prices do slow export demand for U.S. product. I think on top of that, you can look at a country like Australia. So weather plays a big role here. Australia is up 660,000 metric tons, according to USDA, over the 2022 to 2025 period. Uh, Drought certainly cut that Australian herd a few years ago, and they've kind of recovered from that and are certainly getting back in some markets that I think we had control of or were growing a few years ago when Australia didn't have a lot of product. But let's just remind ourselves that total world exports of beef grew 1 million metric tons, or projected to grow 1 million metric tons over the 2022 to 2025 period. But there is growth. It's just not shared equally when we look at the last few years of data. Pork, on the other hand, is a very different story. We look at that same 2022 to 2025 with USDA projections in there. The European Union down 1.2 million metric tons on pork exports over that period of time, while the U.S. is the positive one here, up 476,000 metric tons over that period of time. And it reminds me to say we've almost gotten back to total exports out of the United States in 2025 that would have occurred back in 2019, 2020, when the Chinese were taking a lot more pork from us. So we have found ways to diversify and almost gotten ourselves back to that old plateau that we saw back there. I think that's been the positive news on the pork side. So, very different stories when you look at what's going on in terms of U.S. beef exports versus U.S. pork exports.
And I don't want to talk politics, but I do want to talk about trade policy. As we have conversations, we haven't seen a lot of trade negotiation or trade deal negotiations. And it really seems like neither candidate for president is really focused on that. How concerned are we as we hear conversations about tariffs, about adding tariffs, what that does? Because ag always seems to be an easy target in that space.
Yeah, so I always go, I think this is a fairly easy answer in some ways. Freer trade in ag products, we as the United States win, and both beef and pork have an opportunity to win in those markets. Um, and I think it's you got to have the entire start to finish process on the same page in that. If we're going to talk about expanding exports of pork and beef in front of us by trade agreements that reduce barriers, you got to make sure you have enough slaughter capacity. You got to have each step of the production has to have enough room to grow to accommodate what's going to be additional trade. So it's not just the trade agreement itself that matters. It's everybody else lining up to be pushing for expansion, if you will. And that comes with pros and cons as well. But I will say, back to the question of, I think it's an easy growth for us to talk about opportunities where trade barriers come down to be able to export more beef and pork and chicken out of the United States.
Do we also get concerned when other countries are are doing, or should we be concerned as we're watching other countries negotiate free trade agreements that allows access? And how much of a disadvantage does that put us potentially in the global market space?
Yeah, so I think Japan's a good example of this discussion where um, how many years did we work on the beef side in particular to get a tariff similar to what Australia product faced going into Japan, and how much that disadvantaged us. So we can look back at history, I think, for that kind of information. And again, I think you want to be out in front of this kind of discussion. You want to go grab those new markets where you can, and not be chasing others that are ahead of you in terms of getting uh, preferential treatment, if you will, in terms of access to their marketplace. Um, I think we've gotten ourselves generally in a cycle of less interest from a lot of folks in terms of additional trade. I assume over time um, that may cycle back in the other direction as well, but it's certainly little interest in um, new trade agreements that I think would push more beef and pork out of the United States, at least today.
On on that, if we're going to grow trade, right, we have to be able to have product there, and I think that kind of leads us into this previewing of cattle on feed numbers. And when we think about short supplies, or we think about tighter supplies of beef, what are you looking for in next week's cattle on feed numbers, um, as we still try to find if we're growing and not having the data that we normally have?
Yeah, so we're still chasing, well, how many cows do we really have out there? And I can anecdotally find folks who will say no growth to folks that are saying, yeah, there's growth happening in places. Um, Trying to get a good beat on that's very hard right now. I guess as we think about cattle on feed, number one, we've kept yards fairly full. I think we've done that by feeding cattle to heavier weights, maybe also pushing calves in the yard sooner than otherwise would be the case. Um, so what's that placement number look like? I think we're getting a good indication of kind of fall runs now starting to happen that will give us a good indication of whether we're going to be even tighter in beef supplies as we get into 2025. So that piece is really the only clue we're beginning to get, since we haven't had the traditional mid-year cattle report to let us know whether there's what the situation's like in terms of cattle numbers. I think they're getting tighter. Of course, but more information would be preferred to less. So we'll get a little more next week with cattle on feed.
Also out next week, livestock slaughter, and obviously we talk about this. If you're a regular viewer or listener, we talk about beef cow slaughter numbers, as we know that that's what you're watching for next week. What percentage? Where's that sweet spot for you to think maybe we're holding back and we're not still liquidating?
Yeah, so I still think you have to look kind of at percentage of slaughter relative to beginning inventory to get a good handle on that number. And I'll say, 8% or below probably says we're growing. And although we've cut uh, beef cow slaughter a lot, as we've talked about, I'm not sure it's enough to say we're necessarily growing the herd at this point. Um, and when we only get that information annually now in terms of beef cow numbers, um, that sets in motion things for years. Megan, it's not months, it's not weeks like the chicken industry. It takes a long time to turn this around. So that will be a big number, and maybe to our trade discussion, it reminds me to say I'm not sure beef imports go down anytime soon. I I don't see 2025 as a different situation in terms of enough fat to go with some lean ground beef that will keep beef imports coming into the United States at a fairly good clip, especially if prices here stay as high as we've seen in 2024.
How much has this We talk a lot about weather and drought conditions and how that impacts whether we're growing or we're retaining or we're holding back. It's turned really dry in your part of the world, in my part of the world. Um, it, it seems like precipitation this fall has been feast or famine. Does that maybe for some cow calf guys in your area at one point who had green grass through most of the year start to see things dry up and be like, maybe I'm not there yet?
Yeah, so I think this changes a lot, right? So to your point about the volatility in rainfall, and I think feast or famine is a good way to describe it. On average, this year in a lot of places probably looks good from a precipitation standpoint, but we went from in some cases too much to nothing. Um, and so I think that's probably got some folks on the fence, not trying to expand, too quickly. Um, I think through most of the grass growing um, season, we at least saw enough moisture to get us in a better position. Yes, we're dry right now, um, but not in the peak growing season. I will tell some producers, you and I talk price risk management all the time, but PRF is also out there. So pasture and forage for drought uh, is an opportunity for some to think about, especially if they're already setting in, a dry situation. So there's other tools out there. We can we can have a long conversation about whether those tools are better or worse, but at least producers should look at them and see whether they might fit, given some of the current conditions we see today. Because if we stay dry, through the winter and then come out next spring needing moisture, well, maybe we get it, but it's required to get the kind of growth that I think a lot of folks are going to be wanting come next spring.
Scott, it's always great to catch up with you. There's plenty of reports for us to dig into next week.
Absolutely. We'll see what we get on cattle on feed next week.
All right, we will talk to you then. To have the weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments. And for a rundown of what happens every day in the commodity markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.